RentalCostSeg.com. Get a fast, accurate cost segregation report reviewed by an accountant and backed by our audit protection guarantee.
Now, nobody likes working hard all week only to see the government come in, reach into our paychecks, and take nearly half of our income. Now, today I'm going to share with you a rich person's secret called borrow until you die, and how it can become the fastest way to stop paying taxes. And later in this video, I'm going to show you a personal example of this strategy on how I've used it to save millions, all legally and within the US tax code. And if you've been following the channel for a while, you've probably seen me do it in some of my properties like this one here. So do me a favor, if you've seen me before, hit that like button and turn on notifications. Now, here's the overview of how the strategy works. You make money, you pay taxes. Well, we don't like that. So you borrow money to buy what I call a 3x asset. A 3x asset is something that generates 3 times your initial investment within 3 years through tax savings, cash flows, and appreciation. But we want to buy assets that have an asymmetrical tax incentive, meaning they give significantly greater tax savings than any other asset of similar value, like certain types of properties. Now, as you buy more assets, your income will increase as well as your net worth. But your tax liabilities should be decreasing. You then borrow more money when interest rates are low, even if you don't have an asset yet. When the opportunity presents itself, you buy another 3x asset. Now, you repeat this cycle until you die. Now, your family and loved ones will mourn your death, hopefully, and pay the taxes that you owe from the large portfolio that you have accumulated over the decades. So, there's one crucial thing that you need to understand about taxes in today's video. There are different sources of income that are taxed differently, very differently. But there's only one source that's not taxed at all. Here's a good first example: ordinary income versus capital gains. Now, your salary is taxed as ordinary income at a federal level, which ranges somewhere between 10 to 37%. Capital gains is capped to only 15 to 20%. But there's a source of income that's not taxed, and that is leveraged income, or otherwise known as debt. Some examples of these are reverse mortgages, asset-based financing, like loans holding trust funds, stock portfolios, or life insurance policies as collateral, HELOCs, cash-out refinancing, 1031 exchanges, opportunity zone investments, and so many more. Now, there are 2 simple ways of looking at this. 1, you borrow money to fund your lifestyle. 2, you borrow money to purchase something. In both cases, you're receiving money, but you're not taxed on it. This is one of the rare times Uncle Sam doesn't come knocking on your door to give him his cut. Now, what I've learned from studying the wealthy is they only borrow money in 2 situations. Interest rates are either really low and/or they can make a better return than the interest that they're being charged. Now, a personal example of me doing both is I borrowed approximately $1 million in 2022 at 2.5% interest rate. I'm currently making about 5.3% in my risk-free account right now. So your goal in life should always be thinking, how do I pay the least amount of taxes while making the most amount of money? Easier said than done, right? Well, let's make it easier for you. You borrow money to buy assets, things that make money in multiple ways, not liabilities when you're just making payments. So for example, that $1 million that I borrowed in 2022 was used to purchase businesses, creating 2 others, build a new structure, and then purchase another property, this one here. Stocks are another great example. You buy a share of a stock and it may give you a dividend. That's a stream of cash flow. The share of the stock may increase in value over time. When you sell that stock, you get to keep that extra. That is considered capital gains. But investing in individual stocks or the stock market is as close to gambling in the world of investing as possible. You also don't get any real tax advantages against your W-2 salary when you invest with stocks. Now, I don't recommend you borrowing money, they're called margins, to do this. Stock investing should not be seen as an asset for most people. It is speculation at best. Now, this is where my forte comes in: real estate, especially short-term rentals. Unique short-term rentals and land. Now, let's say that you buy a property with a home on it. You rent it out and you cash flow it. It appreciates over time as you hold on to it, and you're able to depreciate it on your taxes, thus lowering your taxable income. That's my rule of 3 when it comes to assets. Not bad. But traditional real estate investing only allows you to deduct your paper losses and other expenses like depreciation, management fees against your rental income. The most common way to do this is to conduct a cost segregation report on your income property to file with your taxes. And if you've been looking for an easy, quick, and accurate way of doing it, we just launched our new cost segregation reporting website, rentalcostseg.com. That can get your reports done for a fraction of what other accounting firms are charging, and it actually includes an accountant, someone on my team, reviewing your report. And you can even choose to have an accountant go over the report with you in a Zoom call. All reports are backed by our audit protection guarantee. Check out our website, rentalcostseg.com, and the first 20 folks to use promo code KAI100 will get an additional $100 off. Now, with that all said, short-term rentals under the Internal Revenue Code Section 469C7 may allow you to deduct all real estate losses against your W-2 income. Now, here's a cheat sheet to see if you qualify. Feel free to pause the video here and start again when you're done. Now, the key one that we want to focus in on is this here: participating in the activity for more than 100 hours during the year and no one else participates more than you do. This is typically very difficult if you're just doing long-term rentals, just because it doesn't require that much time. Short-term, maybe midterm, but definitely short-term, can require that much time, which is approximately 2 hours of work a week. Now, when you can be classified as a real estate professional or you have material participation, you or your spouse, we just tapped into a whole different tax game. This is how you start the borrow until you die tax strategy, and it is the fastest way to stop paying taxes. Let's create an example so you can understand. Let's say that you make a $100,000 salary. Assuming that you have an effective tax rate of like 25%, you're paying the IRS each year roughly $25,000, right? Nice, clean cut, simple. Now, let's say that you buy a property, not just an average one. You find one and you underwrite one, ideally with me and my team, that sets you up beautifully to be in the top 10% of the market. Now, let's say that you purchased the property for $300,000. You would obtain a cost segregation report of the property and most likely be able to deduct approximately 25% of the purchase price, or $75,000. This year, in 2024, you can do what is called the bonus depreciation of 60% in the very first year, meaning that you can deduct 60% of that $75,000 immediately. In 2022, it was 100, then it was 80, now 2024, it's 60%. 60% of $75,000 is $45,000. Now, what we do is that $45,000 is we can deduct that from our taxable income. Your taxable income now is only $55,000. Now, let's say that your effective tax bracket now drops down to 20%. You now owe the IRS only $11,000 instead of $25,000, saving you $14,000 in taxes. Now, keep in mind, this doesn't include all the other deductions of owning the property, future appreciations, or cash flows from the new asset. Now, this is the formula on how to stop paying W-2 income taxes. Now, couples with a spouse who don't currently work a W-2 are primed to use this strategy. It's one of our primary strategies that we use with a lot of our clients that have a spouse that stays at home or just isn't currently working while the other spouse receives a W-2. Now, here's a recent example of me using this same exact technique. Now, at the end of 2022, I used a portion of that original $1 million borrowed to purchase this home here for $800,000 at 5% down and 6.5% interest rate. Now, I invested $200,000 back into the property for improvements and upgrades, and I was going to be working at the property during construction, so I also purchased an Airstream for $115,000 at 10% down, 7% interest rate for me to do my work, stay, live, and actually film. You probably saw a couple of videos from my Airstream when I was working on this property. Now, I was about $260,000 out of pocket. In 2022, we had 100% bonus depreciation, so I was able to deduct the Airstream in its entirety, $115,000. I was able to deduct all upgrades to the home, $200,000, and I was able to deduct another $200,000 from the cost seg report of the home itself, giving me a total $515,000 in tax deductions. Being in the 37% tax bracket, that equates to approximately $199,000 in taxes I did not have to pay. Essentially, instead of me paying that $199,000 to the US government, I was able to take that $200,000 and reinvest into a long-term asset. Acreage, income home, and then an Airstream for studio work and future construction projects. Now, the property is now worth around $1.3 million, and it pays for itself and the Airstream from rental income. I'm doing this again this year by purchasing another property in Austin and applying the same principle and getting another cost seg report done to deduct another few $100,000 from my taxable income. Borrow until you die. Debt can be a massive advantage. It can literally save you tens, hundreds of thousands of dollars, sometimes even millions, in legally avoiding tax business. Now, subscribe to the channel, and if you want to learn more on how to work with me and my team to strategize your taxes, find and underwrite the next best investment property with you, set up a free call with me and my team to see if you qualify to work with us. Links all down below. Otherwise, go watch this video right here on one of our really cool projects. See you in the next video.